running out of time. August 12th is around the corner.
As tariff talks continue, new announcements from key chip makers are helping to boost prices.
They decided to invest up to $200 billion to onshore some of the chip making and semiconductor factories in the US.
MarketBeat's Gabriel Osorio-Mazilli dives into two standout companies that are both seeing a big boost this week.
The stock went up about 7% on the week.
Which company is a better buy for retail investors right now?
You have to pay a cheap enough price for any asset in order to protect yourself for these unknowns.
Which rising tech company will fare the best no matter what these tariff discussions bring? Let's dive in. Gabriel, so great to have you back on the show today, talking about some more tariff talks, especially with chip makers. This has been one of the biggest subjects of tariffs, is wanting to really get more manufacturing of these AI chips, these computer chips done in the US. And those talks have continued, and there are a couple of stocks that are really benefiting. So why don't we start today with just an update on where those tariff discussions are right now?
Right. This is the subject that everyone has been talking about, right? The tariffs between the US, China, and pretty much every other country that deals with the US. But there's a specific interest with China, given it's the largest exporter of the world and the biggest partner in the US, right? And the one thing that I would say to investors is forget about the noise. There's essentially two main outcomes that are going to come out of this negotiation in this quarter. So last week, representatives from the US, Scott Bessent, Howard Lutnick, and then the trade representative from China, they all met in London the second week of June 2025 to discuss a preliminary option to move forward with before the 90-day truce is over. Right now, they're expecting either 55% tariffs on China and then 10% tariffs on the US. But essentially, that's up in the wind. That hasn't been signed, that hasn't been agreed to. And what has been agreed to is the 90-day truce that started almost 90 days ago. So in August 12th, that is when the 90-day truce ends. And essentially, investors will see one or two outcomes. And that's essentially when getting a portfolio ready and getting a strategy ready before the date is going to pay off dividends for those who have prepared.
Now, let's get into a couple of the companies that those talks are really impacting. And the first one I want to talk about is a really new announcement of trying to onshore some of their manufacturing. Let's talk about what's happening, the latest announcements with Micron.
Right. So Micron Technologies decided, hey, if we're going to be betting, let's bet in the side of history, right? So they decided to invest up to $200 billion to onshore some of the chip making and semiconductor factories in the US. So essentially, that puts a bit of pressure, a bit of tailwinds as well on the stock, depending on which outcome comes out of the tariff negotiations, right? Especially on that catalyst date of August 12th. So I think that if tariffs go up, then there could be an argument that making semiconductors and chips inside the US could bypass most, if not all, of the tariffs in the global spectrum, right? So this could be a major catalyst for Micron moving forward. And even if tariffs don't go up, then essentially they are mitigating some of the future potential geopolitical risks that could come out of Asia, China, Taiwan, etc. Right? So I think they're playing in a smart direction, and I think that could be a very nice tailwind for the stock moving forward.
Yeah, it's encouraging to know they're bringing some of their manufacturing to the US, but none of this happens overnight. So while these tariff decisions are more immediate, it's not like Micron's going to have factories ready to go in the US starting, late this summer when those tariffs could potentially be announced more long term. So do you think that the growth that Micron might see, the benefit this stock might see from this new investment in US manufacturing will take longer to really show up in the stock?
Well, there's two ways to answer that question, and you're absolutely right. It's not going to be overnight. It's not going to be even in the next quarter. We may look at Intel, right, as a prime example, who has been building fabs, which are chip making factories in Arizona, Ohio, and other states, right? That has been going on since 2021. And as far as we know, they are almost done, but they're not ready yet to initiate production. So we're looking down the line at a few years potentially for Micron. But the thing to remember is that markets are forward looking. Whatever impact these potential construction projects are going to take on, those might be reflected sooner than later, especially if there comes a new wave of volatility, a new wave of uncertainty in the semiconductor industry. Now, considering where Micron trades, it is at a low enough point where I would suggest that the downside potential has been pretty much priced in, leaving most of the upside ceiling as a gap to be filled. And like I said, if the market starts to price in some of the potential effects that onshoring production might take, then that forward looking nature might pay investors sooner rather than later.
Yeah, let's take a look at what the chart is showing right now, even for Micron in the last couple of weeks once this announcement was made. What did the stock do? I also want to take a look at what analysts have to say about the future of the stock in the next year.
Yes, so after the announcement, the stock reacted pretty nicely on the potential future implications, right? So the stock went up about 7% on the week. Again, it's not even close to filling that gap we mentioned on the upside, but it looks like analysts are starting to become more confident on this recent momentum and, of course, the fundamental implications that onshoring production might have, right? So, especially those from Wells Fargo, they decided to boost their valuations from $130 a share to 150. That not only calls for double-digit upside, but it starts to fill in the blanks as to whether Micron can fill that upside gap. I think that no matter how long the projects take to get built, I think that some of these analysts and some of these institutional players are starting to figure out that, hey, we're running out of time. August 12th is around the corner and we have to decide which of the stocks in the semiconductor industry might have the best chances to really deliver on the quotas we have to meet for investors.
Yeah, the demand for those semiconductors is certainly there, and that's because the demand for AI just continues to increase. There's more implementation happening every day, and plenty of stocks are seeing the benefit of that. Check out this free premium report just for our YouTube viewers. It's a list of 7 AI stocks to invest in today, and many of these are very interesting. Again, it's free for you to take a look. Just scan the QR code or click the link in the description of this video to get that free report on marketbeat.com. Well, let's talk about another stock in the semiconductor industry that is impacted by these tariff talks, and that's Taiwan Semiconductor. What's going on with that stock this last couple of weeks?
Well, I think the theme for Taiwan is buy, 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 right? I think the stock's price action tells the whole story. It trades at 95% of its 52-week high. So it's definitely deep within a bull market. And I think that with some investors feeling fear that they might have to give up some of this and maybe come back lower, others might say, well, the momentum is unstoppable and we might keep seeing new highs. Fundamentally, though, I think that if tariffs do go up by August 12th, there's two ways to look at this company, right? First, it might underperform other names like Micron or Intel that have already positioned themselves within the US to maybe bypass some of these tariffs. But then the good side or the positive for Taiwan is that its operations are so spread out globally and its market share is, let's be honest, is the dominant position in the whole industry. So while you might not necessarily see a downfall in the stock, you might not see a really big rally either. So if you're looking for safety, if you're looking for stability and a more of a long-term view of how to play the industry, I think Taiwan is the best play here. But again, not everybody's looking to do marginally well, right? Some are looking to beat the market and really deliver. So that's where the picture starts to fade between Micron and Taiwan Semiconductor.
I want to talk a little bit more about Taiwan Semiconductor and the tariff talks that have happened in the last couple of weeks. Is there any new news that came out in those tariff discussions that's impacting the stock right now?
Of course, the presidency in the U.S. has announced that they might remove some ally status with the chip makers in China and all the exports that come out of China, and of course that is going to affect a company like Taiwan very heavily. However, they have started to situate themselves just like Micron, just like Intel, by positioning a bit more into the U.S. Though the capital commitment hasn't been as large as other players. And this is because they also have a positioning in other areas of the market, right? They have new investment in the United Arab Emirates, so the UAE. That's another recent development that's taken the risk, the geopolitical risk, and the financial risk away from China. And there's also the risk of them being in Taiwan itself, right? It's a hot zone when it comes to geopolitical risk and regional risk with China if anything starts to heat up again, right? So I think they're moving in the right direction, but looking at the size itself, right? Owning so much of the market and being so big of a company, it's like turning a tanker ship in the middle of the ocean, right? It's going to take a little bit of momentum and brute force to get that done. While for a company like Micron, you could think of it like a speedboat in the middle of a bay, right? It's going to be a lot easier to get sentiment to change and find new momentum in the stock. So, again, that's where the theme and the narrative for these two starts to deviate a lot.
And both of these companies seen a boost this week because of all of these tariff discussions and what it could mean for their future. But if you were to look at both stocks and the price they're at right now and the news on the horizon in the future, which company is a better buy for retail investors right now?
Well, for retailers, I would say Micron. It's got the discount that everybody knows and loves, right? In the value investing sense of things. And it's also the better one position in case that tariffs do go up, which I mean, historically, right, that the US and China haven't always seen eye to eye on these issues. So I think that the chances of a new volatility breakout might be on the horizon, right? And when that happens, like I said, it's not that Taiwan might necessarily be coming off or not perform, but if you're looking to outperform and see a really big move, that's where you should be positioned in Micron stock, especially as it's aligned with the US interest by onshoring production and also being the smaller company. So you also have to keep in mind that these large buyers, these large institutions, they often don't look into the smaller companies. I mean, it's a budget issue, right? They can't buy 5 billion worth of a smaller company without going unnoticed, right? Well, at the same time, they could go to a large cap and buy the same 5 billion and no one bats an eye. So I think that if they want to go quietly, they're going to be going quietly and unnoticed in a stock like Micron. Well, if they go with Taiwan Semiconductor, is going to be a whole different story here. So, for investors on the retail side, I'll go with Micron.
Very interesting. I do have one follow-up question on that, and that's Taiwan Semiconductors has an earlier, maybe first mover advantage with moving some of that manufacturing to the US. They got a quicker start than Micron did. Do you think there's any potential impact of getting their US manufacturing online sooner than Micron might?
Yes and no. The yes part is, of course, what you mentioned. They got there first, and they have, I would imagine, better treatment with contractors and better zoning rights, or everything that goes in a part of the construction side. And the no part is that being such a large player and holding so much of the market share, I would imagine as well that their factories are going to be larger and more complex, especially given the industry leading technology that Taiwan Semiconductor develops. So, on the other hand, even if Micron Technologies started their projects later than Taiwan, I think that their fabs might be smaller, a little bit less complex, and straight to the point of making the end product and not the equipment, not the raw material itself. So that is up to speculation, but that is the way I would look at it as far as investing in the two names go. Of course, only time will tell, and I would really stay up with press releases within the company's investor relations sites to really see what the development is.
Very interesting perspective on that. Last thing to wrap up this video on tariff talks and how it's impacting the semiconductor industry, chip makers especially. What should investors be prepared for this summer as far as market moves across this whole sector? Do we see this tariff discussion continuing to have some major waves in the future? What can investors be prepared for?
Well, you need to be prepared for the unexpected, right? As they always say, expect the unexpected. We have a lot of geopolitical tail risk. And when I say tail risk, it's the sense of we might know what happens, but we don't know what we don't know. And that is where the tail risk is, essentially. We have the mix of the Middle East conflicts right now. We have the tariff ongoing negotiations that apparently are set to end in August 12th. That's what we know. What we don't know is how the two are connected, because if you have a higher demand for maybe defense names, or maybe the region becomes compromised and now all those plans to build fabs need to change. What happens if that's the outcome? Also, what happens if the trade negotiations fall on August 12th and now we have a further out date and an extended trade war, so to speak? That's an unknown in the future. And I think that investors need to prepare by getting themselves a margin of safety. Now, in the sense of the word, margin of safety means you have to pay a cheap enough price for any asset in order to protect yourself for these unknowns. So, in that sense, I would really suggest you look at the stock chart on Micron and really compare it to the 52-week highs, as it's already deep in bear market territory. So, most of these unknowns might have a very small impact, might have a minimal marginal impact on Micron, while there is a lot more downside potential in Taiwan, technically, right? I'm not talking fundamentals here. That being said, I think that protecting those unknowns and pricing in the knowns is the best way to move forward in a situation like this. Nobody has a crystal ball, really.
Yeah, really great point and good analysis, Gabriel. Thank you so much for your time and for breaking down these two companies for us today. Let us know what you think in the comments. Which one do you think is a better buy? Maybe you already own some of both. What's your strategy with these companies leading into these big tariff discussions and hopefully some announcements and certainty might be coming later on this summer? We'd love to hear from you in the comments. Thanks for joining us, everyone. And as always, happy investing.